Hey traders, Akil Stokes here with Trade Empowered. Welcome once again to this week's live room weekend review video. If you're one of the hundreds of traders that tune in each and every week to join me, I want to thank you once again. And I ask that, hey, don't hold this video to yourself. Share it with a friend. If you have a trading buddy, put it out there. Like it on Facebook, retweet it, whatever you're doing. Just want to keep spreading the word and keep growing this thing because there's a lot of information being given, and the more people can reach, the better. This week, I'm going to do something similar to what I did a couple months ago. Now, a few months ago, I did a video titled Behind Closed Doors, where I actually recorded one of our live room sessions and let you guys actually see what it's like inside there instead of just doing some recaps afterwards. Well, I'm going to do that again this week. Now, our sessions are 3 hours each day, so obviously I can't give you 3 hours, but I kind of cut up the different highlights and the parts that I found were important. We had a pretty good conversation about aggressive C's and risk reward, so I put that in there as well as a few live trades that we did take. So we're going to get into that soon, but before I touch on that, I want to follow up on a great conversation we had earlier this week, and we talked about how the market moves and uh, when it's great for us to be trend traders, when it's great for us to be counter trend advanced pattern traders, and the market basically it moves in a series of expansions and contractions. The market, you can see right here on Euro Yen, it pushes up, consolidates, pushes up, consolidates, and if you're using a trend following system, well, you're gonna take advantage of when the market is pushing up. Let's go to a 4-hour chart to make this a little clearer. If you're a trend following trader, you're gonna take advantage of when the market is trending, when it's pushing up. Advanced pattern traders, we're gonna get hurt, but during these little consolidation periods before the market expands again, this is where advanced pattern traders and counter trend traders really this is where we really see the benefits of what we do. And a great example recently happened this week, and it's been a very, or within the last couple weeks, I should say. You can see the market has trended straight up. We've actually put in a flag pattern for those who trade this. We're looking at the flagpole right here, or a pennant, I should say. And we're looking at a basic pennant pattern like this. And this is probably one of the first things you learn when you were trading. Flags, pennants, breakouts, stuff like that. Uh, well, I don't trade breakouts anymore, so I don't really care about when this pennant pattern is going to break out. I'm not really concerned too much about the bounces off the support and resistance levels, but I'm more concerned about what exists inside this pennant. And if we look really closely, you're going to see exactly how we cleaned up on the advanced pattern side of things on this pair. And I'm going to run through it briefly, but we started off with Gartley pattern, X to A to B, B to C, C to D. Rolled that right into another Gartley pattern, looking at X to A to B, B to C, C to D down here. Next followed it up with a bat pattern, which was X to A to B, B to C, C to D. Actually, I'm mistaken. Before this bat pattern, there was actually a little cipher in here. It's easier to see on the 1 hour chart. I'm not going to go down there just for time purposes, but there's a cipher pattern looking like, where was it? Right in here. Small one on the hourly chart. X to A, well, not on the hourly chart. It's pretty good in the hourly chart. Small one here on the 4 hour. But X to A to B, B to C, cipher pattern C to D down here, which completed, rolled up, hit our bat pattern, and then just a few days ago, we had another bat pattern here. If I can find it, let me go down to the 1 hour. We had a bat pattern that got hit for target one. There we go. Earlier this morning, looking at X to A to B, B to C, C to D up here. You can see we rolled over target one, maybe target two for some. But the point is, during this expansion and after the expansion comes the consolidation. During this consolidation period, well, advanced pattern traders, you could just see it's a buffet of opportunity on the board for us. Just in this little pennant, we had 1, 2, 3, 4, 5 advanced patterns. That's not even counting, down to 15. Now we've seen that the market is broken out to the upside. What do we expect? Well, we expect more expansion. So I expect the market to shoot up some more. And, well, during that period, I'm just going to have to wait and play the sidelines. We'll probably see some trending happen in the market, and it may be, a few weeks, maybe even a month before I get more opportunity. But if I take advantage the opportunity that I do get and handle my business when it presents itself. And by that I mean I don't get scared out of trades. I don't say, well, the last one won, so I'm not going to take this one. It's going to break out now. If I just keep taking them and keep taking them, I'm going to get way more winners than the ones that lose and break out. And when it does break out, well, I just take that loss, write it down on my spreadsheet, um, and wait till the next opportunity comes. So there's a big conversation that goes with this, and I just don't have time to get into it. It was a great topic. We spent maybe an hour or so on it, but just wanted to show you guys some of the conversation and the education that goes on in the live room. It's not just trading. We don't just make money. Making money is fine, but during the slow days, we get some really good education in, and the traders in the room have grown a lot from it. So anyway, enjoy this week's video. We're gonna flash back to a live room session that I filmed earlier this week. Some information on aggressive C, some information on risk reward. Grab a pen, grab a paper, take some notes, and of course, I'll see you next week whenever I put out my next video. Take care, traders, and as always, remember, plan your trade, trade your plan. I'll see you next time. The issue with the aggressive C trade is, well, it's an aggressive move, and we just don't know when it's going to complete. You know, you got to think about it like this: how many times do you see an ABCD pattern in the market? Every time you see an ABCD pattern, for the most part, depending on what it retraces to, you're going to have a busted aggressive C. Just as in this case right here, Aussie dollar, ABCD pattern completion, stop riding the dime. Guess what? Aggressive C traders, you would have been stopped out. That's the downside of it. The plus side of it is the risk reward. We know the only reason we're entering this aggressive C is because we expect an advanced pattern to complete. Correct? Target one hit on euro yen. Oh yeah, there we go. About time. Patience pays off. We're probably going to get filled on pound yen as well. Let me ring those registers real quick before I get back to our originally scheduled program. Good stuff, traders. Your favorite sound. Ka-ching. Give yourself a little applause for that. You sat through it. Gave us a bumpy ride. Went up. Took us from green. What we did? We came one pip away from getting hit, and then we went back up to the negative for the rest of the day. Now we're back down. So good stuff on that. Target one hit. Looking for target two right now. And then, of course, pound yen maybe getting filled as well. But back to the aggressive C thing. I lost my train of thought. We're only trading it because we're expecting this advanced pattern to complete. Therefore, if we expect this advanced pattern to complete by our rules, we know that if the A leg is penetrated, right? If C leg breaks the A leg, it's an invalid pattern. We know that. So you can have really low stops. No, you're looking at stops that can be literally, I wouldn't put them one tick below, just in case you get slipped. But you're looking at stops maybe right about here. So if you get filled right at this 786, here's what you're looking at. You're looking at a potential stop loss of about this much. And you're looking at a profit target of either this. When I take aggressive C's, I shoot for the B leg for target one. That's just because I'm mainly a structure-based trader. I find that to be more safer. I shoot for target one right there. And I shoot for target two. Come on, let me copy and paste it. I shoot for target two at a completion of the pattern. So right about here. And as you can see, it just offers a very good risk reward. I mean, you're looking at almost on every aggressive C, at least a 2-to-1 to target one. But you also need to take a look at other tendencies that may be there. You know, if I get a double bottom around that 786, is there a higher frequency of the market reversing? If RSI is oversold, is there a higher frequency of reversing? If there's divergence heading down, does that put me at a greater chance at this rolling over? Let's check out. Was there something up here? Well, look at this. In this case, we had RSI divergence going into our aggressive C. If you're entering up here somewhere, the market has been pushing up, as you can see, let me thicken this up for you some. The market's been pushing up some. At the same time, look at that. What has the RSI been doing? Pushing down, right? So the market, we talked about divergence earlier. The market's giving you kind of a sneak peek. It's kind of, nudge you on the shoulder saying, hey, I'm running out of steam. Maybe this is something that you put in, to your plan for aggressive C. The point is, and it is going to come back to the having a strategy. It's not going to come down to just taking it every time. You need to have a strategy. You need to, just like strategy development we talked about earlier, how to develop and make your own strategy, how to find your own trading technique or develop your own technique. Same thing goes for aggressive C. You need to test different things out and figure out what's important to you. So when you get an advanced pattern that forms, you need to take a look at that C level and ask yourself, well, what was special? Why did the market turn around here? You need to look at those ABCD patterns that were busted and say, why didn't the market turn around here? A great example right here. RSI divergence on the Aussie one, we had no such thing. Maybe that's something you can use. Potential Gartley pattern on Canada looking at 102.13, right? If we're looking at 102.13, we're looking at target one being right here at the 382. And we're looking at our risk, our stop probably being down here somewhere. We don't know where where it's gonna come to, but we've got an ATR, daily ATR of about 51. Our X is right here at 99.31. Let's go 99.31 minus 51. If we do just a short one ATR stop, we're looking at 98.80s. We're looking at a risk reward of about this much. We're barely getting the 1-to-1, and whenever you get these perfect Gartleys, that's how it's going to be. So what do we know if you're going to get a 1-to-1 risk reward ratio? How much do we have to win? Right? We have to win more than we lose, correct? If we're lining up like this, let's take target 2 out of the equation right now. Let's just say one target. We have to win more than we lose in order to be profitable. Should be pretty obvious. But we're looking at this. Aggressive C, you could literally put stops right here, because again, we know if this is busted, let's just copy and paste this. We know if this is busted, it's invalid. So if he enters right at the 786, you're looking at stops maybe right about here. Maybe give yourself a little cushion. Reward wise, where are we looking at reward wise? Well, check this out. Pattern completion. Right down here. So take a look at this. That's going to be a little, I did that wrong. Here we go. Take a look at these two scenarios and ask yourself which looks better. What do we have here as far as risk reward? We have almost a 1-to-3, right? 1, 2, look at that, just about 3-to-1. What does this tell you about winning? How many times do you have to be right compared to how many times you can lose and still be profitable? This is the key. This is the key right here. So it's not a bad technique to learn, but you can't just. It's a lot more than just saying you're going to trade it every time at the 786, because you're gonna blow an account that way. Target 2 hit on Euro Yen, probably stopped out of pound yen. Yep, stopped out of pound yen. Target 2 hit on Euro Yen. Good stuff. Yeah, we actually are. I didn't think we were at that. I thought we broke the structure level. We're actually in that DSR zone. So yeah, got 5 minutes until the candle closes, or if I can watch on the range bar. But yeah, may take a shot on this. See how far. See what happens in the next 4 minutes or 3 minutes. Euro dollar, nothing. Euro yen, same thing. You're getting a double bottom here on Euro yen. We can bring that over to the range bar charts as well. Reason being, because I want to get below both these DSR levels. We're at a DSR level here, major and minor. Then the DSR level here as well, major and minor. So I want to get below both. But long at 129.40. Let's go ahead and get target ones at our 382, 149.69. Target 1. Maybe missing the pound yen, but need to get these on. 129.94 for target twos on euro yen. Yeah, looks like we're gonna miss the good fill in the pound yen. We have a double bottom, but it looks like we may have spiked up, and I'm not gonna take an order this far away. And in scenarios like this, there's not much you can do. I mean, looking on the range bar chart, we never got a double bottom on the range bar chart. You can see we didn't quite get down to the close of these candles. 5-minute chart, well, we never got a close of our bar until right now, and I'm not gonna take a double bottom this high. So just one that got away from us. Let me type in these orders for euro yen. We can actually move stops on. We can roll stops on euro yen already if you want. What we did was we came up and we broke our structure high. So 26.18 trades, you may have a chance. We can roll stops below this level now. So I can take my stops from 129.13 to 129.23 because of that break of structure. Oh yeah. That didn't get filled yet, did it? Did we come down? It did spike down and get filled. Yep, that cipher down at 54. Yep, 54.59. You should be filled there, guys. Should be filled. Sweet. Anyone else in that pound dollar cipher pattern? Buy 54.60 was that, or 54.61? Again, stops need to be at 54.07. 10 pips below that, below the X leg. See if we can go 2 for 2 on these cipher patterns today. Yep. Perfect chance to take a graceful exit trade here on pound yen. Looking down to the range bar charts. We took this trade originally on a trend continuation trade. I didn't quite get a double bottom, so I can't count it as that. But trend continuation, meaning market came down. We've created higher high. Or we created a high. We created a higher low. New structure high right here, followed by a higher low. This is where we got long after H3C entry, and well, the market has come down to break our structure level. So this tells us that, well, we're wrong. Our analysis is wrong, right? We did get saved by a butterfly pattern, looks like, as well. If you look at a quick X to A to B, B to C, and C to D. It looks like a butterfly saved us. But in this scenario, when your analysis tells you that you're wrong, a graceful exit technique tells you that, well, if price action somehow gets up to my original entry, or at least near my original entry, then I'm just gonna save face and kind of just get out at market, get out for a quick loss or just an easy break even, something like that. So this would be the opportunity where you wanna load that up if that's in your strategy. We can actually move broke structure again. We can move stops up to break even on euro yen. It's gonna be a little riskier, but we did get, you can see, a push up. It looks like we came back. Did we hit 382? Yeah, it came back to the 382 here. And we made structure highs again. So I've moved stops to break even. Follow your rules. Feel free to keep them where they're at. There is a chance that we can come down here and you can get stopped out for break even and then shoot back up to win. That happens, but my philosophy. I want to put myself in the safest position. Whenever I get a chance to protect my my stop loss, I want to take that opportunity. I'd much rather break even on a trade and miss a winning trade than catch a losing trade.